we're going to kick it off. Hello and welcome to this session, the startup ecosystem in the Netherlands, entering, scaling, and managing growth. Together, we'll discuss what's worked for tech ventures in the Netherlands thus far and what trends founders can anticipate to power their growth going forward. My name is Maria Pereda, Partnerships Lead at Capchase, a platform that provides non-dilutive growth capital to founders. Today, we're joined by three speakers: Arthur Nobel, a former entrepreneur, host of the podcast Leaders of Growth, and current principal at Knight Capital, which is a venture capital firm investing in software startups in Series A and B. Jan Speelman, a former strategy consultant and now the country manager of the Netherlands and Belgium at Agicap, one of the leading cash flow management platforms in Europe. And Henrik Grim, a tech leader currently leading Capchase expansion throughout Europe. So before we get started, some webinar logistics. We will have a panel format throughout the session, so please feel free to add your questions to the comment section and we will answer them throughout the webinar. So kicking off, let's get started discussing the market context in the Netherlands. So, we saw an incredibly successful year for European startups in 2021. Within Europe, the Netherlands is actually known as one of the most favorable markets for startups. Startup Genome named it the third startup hub in Europe. So Arthur, question for you. What do you say it's driving this market growth?
Thanks, Maria. Great to be here today. I'm really looking forward to this conversation with all of you. So, actually, I think there are many reasons the Netherlands. Obviously, I'm Dutch, so I'm maybe biased, but I think there are many reasons why the Netherlands is a favorable market for startups and for investors at the same time. I think you have the obvious reasons, like there's a large expert community here. For instance, in Amsterdam, many people in the Netherlands speak English, though with a Dutch accent. I think there are some strong universities. Also, there's like really this early adopter mindset, I think, to innovation, which makes it very easy to launch here and get traction quickly. But also from the investor perspective, what I see is that the Netherlands is very attractive. So we're investors in Durum, so we use their database quite often. So what we figured out was that if you compare the amount of funding that is invested in the Netherlands compared to the exit value that Dutch startups basically generate, then you see that the Netherlands deliver the highest multiple, at least in Europe, but also beyond that. So for every euro invested in VC funding, there was like an exit value of 8.8 on average in the given time frame, compared to, for instance, 4.7 in Germany and 4.9 in the UK. So I think both from the startup perspective as well from the investor perspective, there are some really strong trends added to this legislative and tax regulation aspect that make the Netherlands an interesting country, I think.
That's great. Thank you, Arthur. Certainly all the right ingredients for growth. And, we can probably talk about specific examples, right? Henrik, Capchase recently launched in the Netherlands and Belgium as well. But, can you talk a little bit about the decision process behind this and why the Netherlands is so exciting for you and for Capchase?
Sure. Yeah. Thanks, first of all, Maria, for the intro. And I think Arthur is touching on a few key points, right? There's a lot of favorable regulation that has been set up. There is a strong investor base, both locally as well as sort of international funds looking at the market. And in particular, there's also a really strong base of talent, either in the market already or that can easily come into the market. And I think that has led to the last year we saw the VC ecosystem. So the amount of funding going into the Netherlands grew incredibly quickly. So last year it was almost 4x up versus 2020. And that positioned Netherlands to more than to be at the same stage of more than half of France, which is obviously a much bigger country. And so I think there is a lot of interesting dynamics that we're seeing right now where there's a high activity in the market. And that also helps us in terms of focus. The other sort of thing is that we are quite excited about, given sort of the stages that we active in is the fact that there's a big sort of recycling of talent going on, as well as angel investments. We have had a few big winners in the region, in ADN, in MessageBird, Molly. We're starting to see second generation entrepreneurs come out into the market and sort of fuel the ecosystem even more. And that, I think, also helps entrepreneurs at the early stages with more inspiration as well as more talent to build their businesses. So those are a few things that, on the high level got us excited. But then, we're obviously an alternative financing platform, to your point, and we saw actually a lot of inbound preemptively in the market, hypothetically, because of the lack of alternatives for these founders. And I think with Europe now already representing 25% of Capchase's global business, we also had the muscle to start to invest more into the region. So those are, on the high level side, why we think the region is exciting, but also why we decided to now pull the trigger and start investing properly into the market.
Thank you, Henrik. Jan, since Agicap launched last year and your experience prior to that, how have you seen startups capitalize on these benefits that are specific to the Dutch market?
Yeah, thanks a lot, Maria, also for the introduction. It's nice to have this chat. I fully agree with what has been said by Arthur and Henrik already with respect to some key fundamentals. One thing that we observed with our own introduction in the Netherlands, as well as in discussions with customers, is that the market is very technologically advanced. So people tend to be well educated and know how to work with software tools and technology in general. And this is a bit of a two-edged sword. On the one hand, that means that the market is open to trying new technologies, testing it. There's a willingness to trust and believe and invest in software, as long as the business case is positive, of course, to try new concept. At the same time, it also means that there are already quite some alternatives because people are more advanced in Excel. There is a general knowledge and culture of APIs, which, for example, doesn't exist so much in Italy or Spain. So the delta that you can bring is often, or risks being smaller, but at the same time, it does mean that the Netherlands is very fertile ground to test new concepts. Because if they work, they probably will really work everywhere. A second point that I really noticed is that the Dutch are, since long their long history, very commercially. They have a very commercial mindset. They like to make deals. They like to do business and don't want to always overthink everything up to the biggest details, which might become a problem once we get into conflict. But it does allow to move fast, and I think this really also helps in this entrepreneurial market that we see, and as a result also leads to the successes that Henrik mentioned upon of an Adyen, of a Molly, with very successful founders that also will reinvest into the market again.
Thank you very much. So let's get a little bit into the weeds about how companies, once in Netherlands, that they can scale their company internationally, right? Like, what would you say are the key levers that SaaS founders can use to really power their growth, Arthur?
I think we can do an entire episode on this question. It's super interesting. So let me just come up with before I think like main reasons that can help you turbocharge your growth. So on the first aspect, I think it's playbook. Second, it's process, then capital, and then hiring. So just to dive into each of them a bit more. So on the playbook aspect, I think just having a fixed approach to internationalization is really key in order to get your basically internationalization efforts successfully off the ground. On the second aspect, on process, I think it's particularly important that companies follow a fixed set of steps and processes to execute the internationalization efforts. This just really helps, to be time efficient and cost efficient. And what I particularly like to stress here is that I see successful companies that they use a stage-based approach to internationalization. So they start with a rigorous planning, really thought everything through. Then just with small MVP validation, then rolling out, and from there, like scaling up the country. I see this sort of like high over process as being critically important. And of course, capital. I think that's also where we talk about today. But that's like really an enabler for growth and to turbocharge internationalization. Being fast is very important in today's competitive SaaS market. So capital, I think, is one of the main reasons for successful internationalization. And then the last part is, of course, hiring. If you are able to attract people who have done it before, or have like a dedicated head of internationalization who basically prevents you from making all the mistakes that you can make, especially if you're like a first-time founder or first-time being in such a large-scale startup. I think those 4 factors are really crucial in order to realize your goals.
Thank you, Arthur. And I'm sure we have today many first-time founders here in the room. So what would you say is the common, like, if you were to tell a first-time founder, like, don't do this while trying to launch an internationalization plan for your company, what would those be? What would you avoid?
So one is, of course, so let me give you 2 reasons. I think one is dedicating all your money without like rigorous planning in one country, so that you see that statistical experiment and you have like maybe 3 countries to go into. If you then just, for instance, only pick Germany, and that's where you allocate all your money through, maybe it might make more sense to do rigorous research in like what's the best country for your market, and test it, especially if you have like an inbound generative model, so marketing-led model or PLG model. Just allocate some sums of money in each of the 3 countries and see basically which returns you get. So that's one. And if you're in a sales-led, that's basically the second example. If you have like a sales-led organization, don't bet on one salesperson going into a country, and then, for instance, take Germany. So in the Netherlands, we have close relationships with Germany, always have. So we enter Germany, and then we basically say, okay, one sales guy or girl is going to do it for us. And then after 6 months, person is not performing. Then you get a question in the board, is Germany not working, or is the salesperson not performing? And you cannot answer it because it's one person. So if you send 2 persons into the country, there is still a risk, but you make it dramatically smaller, and you can basically test a bit more if it's the person that you hire that is wrong, or is it the market that is not working for you. And I think that really accelerates and limits your spending in a country. So that would be, let's say, my 2 cents.
Go ahead, Jan.
To add to that, I think it very much depends on your business model and how much localization you would need in order to launch in a new country. Looking, for example, at how we tackled the international scaling from France, where Agicap was initially launched first into Germany and then into Spain, Italy, Belgium, and Netherlands. We spent quite a bit of time on assessing, okay, which market do we think makes most sense to launch first in, which was Germany for us, and then went in there with all the power that we had, as in full focus of the founders, of the leadership team, hiring locals that were actually working from our HQ in Lyon to do the first sales, to be close. So in order for them to be close to the existing French team, learn from them, build the right culture, and take it from there. The reason that we didn't go into multiple countries at the same time is, one, it took time. We believe that you really need to be local with our product. We focus on SMEs, and therefore we think we need to have a local team with local presence, local product, local VATs, etc. So just the cost of localizing the product was too high to do it in multiple markets at the same time. Secondly, the time spent of key people that can act as an enabler in making a new launch successful, mainly the founders in the end, is limited. And if they need to spread this time over multiple markets at once, it's also tricky because you might not set yourself up for success there. And I think that's a very important trade-off and choice that needs to be made by by businesses if they want to start scaling internationally. What are the fundamentals of my business, and is it indeed possible to tackle on multiple markets at the same time, especially as a first test to launch abroad?
Thank you, Jan. That's very useful, and I would be curious to hear from you. Right, if you don't want to tackle multiple markets at once, you need to be very selective as to like what market to choose next, right? And really focus your energy on that one. So, how would you make that decision? You know, of course, it depends on the business model that you have, but what are the key things that you would analyze to say, okay, this next market has the right ingredients for us to grow there?
To me, I think much comes back to what Arthur also mentioned. Like, okay, let's do some small tests, because you can do a lot of analysis. Germany is a big market, UK is a big market, Spain is a big market, so probably more interesting than Belgium or Luxembourg. But you might be wrong with such a hypothesis, because there might be much more competition. There might be less of a adoption towards technology or whatever. Of course, you need to start somewhere, and I think some high-level market assessment makes a lot of sense to do. Although I think that in the end, you would end up with the same short list for practically every business. And then, if you can do some tests by activating an inbound strategy, putting online marketing live, you at least can talk to some customers or prospects and test where is their pain, what would work, what wouldn't work, and make a decision based on that. I would tackle it quite pragmatically, actually.
Yeah, I think one of the things what just Capchase has been doing, I think, as Henrik told, that you just got like the inbound leads, and from there basically you made your case to enter like in the Netherlands. You can do that like in an orchestrated way. It sort of happened to you, and now you made a decision. But on the other hand, sometimes you can also just enter a country as a soft launch and have. I mean, I'm a growth hacker by trade, so you can just have like sort of like an empty, just like a front page, and there is nothing behind it, and you sort of see how customers react, and you start making all the sort of localization investments and efforts once you have a sort of minimum set of basically proof that it's going to work, and from there you can make all the investments, I think, as Jan rightly pointed out.
Exactly. I think that's exactly how we've been thinking about it as well, where it's essentially about defining. So we've defined 4 different stages of maturity of a market, and we can essentially, as we unlock certain traction numbers, essentially as we see proof points at different stages, we unlock the next stage and increase our investment. And I think the core thing is obviously about aligning the level of investment into what you expect to get back within that sort of phase of investment. But it also allows you to make sure that you do it properly, because to Jan's previous point, there's a lot of risk that you, and Arthur as well, there's a risk that you spread too thinly and you try to invest a little, but you won't really know for sure whether it's the product, the market, or the execution that's not yielding what it should. So therefore, having a structured way of sort of rolling that out in phases is how we've approached it.
Thank you, Henrik, and I'm sure we experience this in Capchase, all the time before assessing our next market. But something that a lot of founders wonder is regulation, right? In Europe, you need to assess a different regulation per country, right? So, but at the same time, you want to accelerate growth as much as possible and test and experiment in different markets at the lowest cost that it can be. So, to all 3 of you, how would you recommend, like first-time founders or second-time founders, to navigate the regulatory landscape before launching in a specific market?
Yeah, I can probably jump in here. We're in the financial services industry, so that means regulation is sort of front and center, and essentially what we did at the early stages of sort of planning our international expansion was map out the markets in terms of 2 dimensions: the size of the opportunity and the complexity to serve. And I think the complexity to serve, there were a few bullet points, but the biggest one was regulation. So there were essentially 2 phases to understanding regulation. There was a high-level scanning that we did together with advisor partners to essentially put together the overview of the addressable markets that we were considering going into. And then for the ones where we identified, lower barriers or, significant complexities to enter, we essentially went deeper to verify some of those. But that helped us in a two-stage approach to at least prioritize first, and then sort of map out the plan of where do we go when. Because regulation is one of those things that if you do want to serve, it's simply something that you need to go through, and therefore it's more about when do you prioritize to do it, and then sort of if.
I think you also have always this debate of going wide versus going deep, and I think especially if you have this regulation aspect in the market, then it's particularly useful to make really calculated investments and really go deep in a country. So if you, for instance, target Germany, really try to win Germany as opposed to some other businesses that I'm involved with, where you're much more agile, basically.
I think this also makes the need for validating quickly when you're still deciding which market to go into very important. Because if you indeed need to make investments to comply with regulation, you can't easily switch. And that's maybe also a point that I've noticed quite often, is that not everyone has a clear view on what are KPIs that we'll use to decide whether we are successful or not, whether we go into the next stage, as Henrik points it out, and two, how much money are we willing to invest? Because it's always a thin line between thinking, okay, if we take another few months, we'll get there, we'll be able to prove that certain things do work while we've been struggling with them. And I think it's also a normal path that not everything starts perfectly. You need to stay agile, you need to learn, and you're basically building a new country new business in the new country that you're launching. So you need to make an investment there. At the same time, at some point, you also need to dare to take the call. Okay, we've put in everything that we've got. It's not because of the wrong people being there. It's not because of insufficient focus, insufficient investment. It just doesn't work. We rather stop and focus our efforts somewhere else.
Yes, thank you, Jan. And that's similar to a question that we have from the audience here. The question specifically is, if you're entering 3 to 4 countries and it turns out you're only getting traction in 2 of them, what would that mean for your internationalization plan? And what would that mean if the countries of success is not your home country? If in that case, that would be the Netherlands.
Yeah, I think Jan maybe partly touched on it, but I think from my side, it's about evaluating whether there's one or 2 things that's happening. Either we're not getting traction because there's an inherent market challenge that we can't get across, and we would need significantly more time to find product market fit here, or whether we've set the wrong targets, right? And it might simply be that our plan was off. But I think first figuring that out and then making a decision based on that. I think staying sort of what country it is probably matters in the sense that it has to, it's about you going back to the drawing board and sort of revisiting that prioritization framework that you had up front. But in the end, daring to pull the trigger and actually backing out of a new market also can be the right decision, right?
Right. And yeah, I mean, there are several common pitfalls that scale-ups experience during rapid growth, right? So Jan, can you share some examples of companies that you have seen who have successfully navigated these pitfalls? Because one thing is seeing these pitfalls, but then, successfully navigating them.
I'm not sure I have many concrete examples of businesses or their names top of mind, but I think one of the biggest pitfalls that I've seen is the lack of focus, especially the lack of focus of key people. And it's a cliche. I mean, everyone always says it, and it's very difficult to put into practice once there. But in the end, when you're building a business, whether it's from scratch in your home country or launching it into a new country, it's all about getting your product market fit, getting traction, making sure that you have the right people on board. And you need to take it maybe even day by day and think, okay, what can I do today to win a customer, to win our first customer, to get to our first 20, 50 customers? And until we are there, I'm not going to bother too much about HR processes or how the onboarding of this customer even works. Let's first try to see whether we're able to sell the product in the first place. And I think optimizing prematurely for things that are only relevant in a second or third stage is a very big risk. And one example of this, we do cash flow management for SMEs, and so we believe that it's very important for an SME to have a real-time overview of the amount of money that they have in their bank account now and into the future, as it allows them to make decisions. However, most people spend, and that are the founders of these businesses, CFOs, spend time on collecting data manually, aggregating it into an Excel sheet, and trying to do some forecasts. The output of this work is very valuable, but the input is not. So I think there you also need to be smart in where do you allocate your time and challenge yourself continuously on, am I making a difference here? Am I making a 10x impact with my valuable time or not? And if it's not the case, either stop it or automate it or ask someone else to do it. And the second point would be, in my view, which I just touched upon already, is the lack of having clear KPIs of measuring success or measuring failure, and thus maybe a need to stop somewhere.
Thank you, Jan. And you touched on a point that Arthur also mentioned earlier, which is access to capital is incredibly important to have a successful internationalization plan, right? So Henrik, for companies that are, growing very fast, how should they think about optimizing their strategy towards fundraising with all the multiple options that, most startups have today?
Yeah, I think it comes down to a few different things, right? First of all, I think it's about what Jan touched on, which is how to manage the cash that you have, actually already have. And the second one is what financing to use to refill that cash position. And then thirdly, what to be mindful of, right, when you're raising capital in general. And I think if you start with the first one, managing the cash that you actually have, startup by nature, if you look back, the way that we built the ecosystem have super lumpy cash flow profiles, right? You raise capital, you burn through it, you hope that you're going to get to whatever metrics that unlocks the next injection, and then you raise again, and then you burn through it, hoping to meet metrics, right? And so that sort of very lumpy cash flow profile is typically quite stressful, right? It's stressful for entrepreneurs. It's creating friction in how you are running and managing your business. And I think in particular to Jan's point, smart companies use tools like Agicap to maintain control and a view on that cash flow profile, right? And then what we are doing a lot with our customers is help them smoothen out that curve. So instead of having incredibly lumpy profiles, they can use alternative financing in between those equity injections to get a smoother ride, and that creates less stress and the opportunity to grow faster or get further before you raise your next round. And so I think using tools like Agicap or Capchase can be really helpful. But then I think obviously when you look at the sources of financing that creates that jump in cash position, what we find is really interesting is the fact that if you look at traditional SMBs, they use debt to roughly 30% of their balance sheet. But in the digital ecosystem, that same number is roughly 3%. So 97% typically of what SMBs and the tech ecosystem using is equity. And equity is great. It comes with a lot of other things than only cash. It comes with advice and experience, but it's also relatively expensive. And so therefore, using different types of financing can allow you to optimize the cost of those capital injections over time. And I think thirdly, one thing to be mindful of in general with any type of financing is that whenever you raise capital from anyone, it always comes with expectations, right? So it always comes with expectations on hitting certain milestones or growing to a certain point, and being mindful and understanding that of how equity investors or how debt investors will think and look at your company and what expectations they will put on you as an entrepreneur. I think that's core to understand. And that is this sort of final piece of advice that I would make sure that I keep track of as an entrepreneur.
Thank you, Henrik. And yes, I think sometimes there's this misconception, right, of like either you raise venture capital or you raised alternative capital, right? And what we're starting to see is most founders, like the most successful founders, actually use a combination of these, right, of venture capital, tools like Capchase as well as debt, right? So what would you say, to the founders in the room here? There's probably not like a one optical combination, but what piece of advice would you give these founders when they're trying to decide what is the right combination of capital sources for their growth?
It's a great question. And I think it's something that, to your point, there's no one true answer. There's no real silver bullet. I think it all comes down to you as a founder on the business model that you're running and the capital needs that you have. There are different types of financing that suit different use cases in different ways. So how I would think about it is in terms of use cases, right? Where does this capital take me and what do I want to do with it? Is this about investing significantly in getting from 0 to 1 on a product and finding product market fit? Well, then venture capital is perfect for you. If there's significant risk in the execution, then there's very few other sources of capital that will allow you to take that risk, unlike venture. So that's perfect. If you have a relatively stable business and you're executing and need working capital, there's other solutions for that. So I would think more about your capital needs and the use cases for using that capital and balancing the split between the two based on that.
Thanks, Henrik. And other things that founders tend to complain a lot is just the time it takes to raise capital. Like, sure, dilution is incredibly expensive, but sometimes, the greatest asset that a founder can have is time. So if, let's say, you're at a point in time where you don't have a lot of time and you really need to raise that capital, things are going well, you have a good LTV to CAC model, you have a healthy business, what is the best capital source to really raise capital and not really lose a lot of time raising from external investors?
Do you want to go, Arthur? Or
oh, yeah. No, sure. I was thinking. It was still you. It's actually quite interesting. As a VC, I would complain that rounds nowadays are getting faster and faster, sometimes even over weekends. But that's maybe also I think it really depends in the segment that you play. Obviously, where I think the value of players like Capchase really come in is that if you look to basically a typical founder, who has a B2B SaaS company and then gets to IPO, they only have 9.1% of equity share. I mean, I've been a founder myself, and I personally think that's fairly low. You work 10 years from that, and then at the end of the day, you have 10% of still a massive company, but it doesn't justify, I think. If you look how do you got from 100 to basically to 9? You see there are some equity players along the way that provide you funding. And I think there I would really make the distinction between value-add investors, as Henrik rightly pointed out, that really help you get sort of to the next stage, that are there in the good and the bad times and help you get to that IPO. But I also think there is actually a lot of, let's call it, plain capital, you get money on the bank and that's it, but then basically charge a hefty equity price for it, which I think is something that players like Capchase are disrupting. And I actually think that that's a good thing, because if you look on a macro scale, if founders keep more equity at the end of the day, they can also even build bigger businesses. So 10 years ago, we were talking about unicorns. Now we're talking about decacorns. And you know what? Maybe in 5 or 10 years, because you guys play this role in this ecosystem, we'll talk about 100 billion is the next threshold. So all in all, I think also if you just look to the more mature private equity market, we now get more tools and they can complement each other. And also see that in my portfolio, that's actually a good thing, and it's not about competition.
Certainly, and I can imagine also, for your existing portfolio, having your portfolio use different sources of capital that are non-dilutive or flexible, it also helps you to, save some of your dilution as well. So that could be helpful in a way. So why don't we? Oh, please go ahead.
Yeah, so I mean that's definitely one thing, but what I also see, I mean, when I have my own company, and sometimes we're really pushed into fundraising when I wasn't really ready for it. And that was never like a great feeling. I mean, you want to go to the market, and sometimes, I think as Henrik pointed out, that your cash flow can be really bumpy. It's just, sometimes it just takes a quarter or 6 months more before you have sort of like hit your milestones. And that's sort of the perfect point to go to the market. And what I see with my portfolio companies is that I actually like to have this complementary source of funding, so that's at the end of the day they can raise at the right point for them, and I think that will help the ecosystem in general.
Thank you. That's a great context. So why don't we jump on what's next, right? What would you say is the single biggest trend that founders and CEOs should be anticipating in the Dutch market, and how can they get ahead of it? And I'm sure we're going to have different perspectives here. So why don't we get started with Jan?
It's an interesting one. I think to me, it has to do with people and a potential mismatch between what employees want, especially a younger generation, versus what you want as a business owner or when launching, scaling into a new country. Especially given the competition that there is on the job market, there are many nice, interesting businesses that are scaling fast that all come with the same story towards potential candidates. And so it means that it's quite a candidate-driven market with salaries going up, expectations in terms of everything going up, including work-life balance, etc. While when you're launching a business, you actually want to have people that are super committed, that are really putting their shoulders underneath it as much as you are, and put in long hours, long days, work hard to make the business a success. And especially the first 10, 20 people are key for that. And if you fail with that, you probably won't even get to 100 or 200 or more, because it won't be going fast enough and it won't be successful enough. And I think striking the right balance between being demanding on your team, especially your launch team, building a high performance culture, while at the same time also accepting and adhering to the market demands from candidates and the job market, is a very tricky one, but important to navigate well in order to be able to scale your team just from a people perspective.
Yeah, I think I can just agree. I think talent in general is a bottleneck if you're growing fast or if you're growing at all. Despite all the good things we said about sort of regulation and so on in the Netherlands, helping talent to flow into the country, it's still on a European level a challenge. So I think we'll continue to see that as the funding into the ecosystem has grown a lot the last sort of year. We'll continue to see that comp is sort of on the rise, and companies like ours will sort of have to fight even harder and work even more with motivation and realizing why this is an interesting journey and not only a paycheck. But I think that is one of the core things and core challenges to the ecosystem that we're seeing in general.
I think really great points. There's not much to add on this. I think sort of as let's call it like as an opportunity for founders. I think now we're all be having this session remote, which I think is great from many perspectives, but also with hiring. So hiring remote talent, I think that's really one of the vital solutions in order to get people from ecosystems that have more experience. For instance, in the Dutch context, it can be from Berlin or London or even US, to join your company in a sort of like easier way than it traditionally used to be. So I think that's really one of the opportunities to cope with this trend.
Thank you. And we are almost close to end time, but if you have any questions, feel free to drop them now in the comment section. We have one. This one is about fundraising, and it is, what is the best season to start fundraising, keeping in mind 6 to 8 months from start to deal closing?
So let me say that I don't agree with 6 to 8 months. In today's funding climate, I would. I've seen really deals gone really fast, but let's take like a more historical average of like, let's say under 6 months should definitely be possible in today's time frame. If that's not the case, then start questioning the investors that you actually speak to. Or if you have the right story to go to an investor at this point in time. If you talk about timeframes, historically, always January. I think also Henrik can remember that from his days. January, crazy busy. September, crazy busy. So I think those are the typical timeframes. But at least don't start going in July, because that's just less chance. More people want to go to the beach.
I agree. That's probably the only feedback that I had, that there is still sort of a bit of a summer lull in the European ecosystem there. But apart from that, I think I would just be very mindful of the company's cash position, like we discussed. Right, this is much more about forward-looking planning from the company perspective than sort of tailoring into sort of investor timelines, I think, and schedules. So I would sort of focus on the capital needs of the business and see when is the right time. But to Arthur's point, hopefully there should be like a shorter than 6 months sort of perspective on it. But I'll still plan ahead properly. And if you need more time, then obviously you can look into options to sort of extend that runway, get some more time, or accelerate further before you need to fundraise.
And in talking about being prepared, here's another question as well from the audience on, how should we be preparing our cash positions in anticipation of a more conservative funding market?
I think this is a great question. I think we are actually starting to see it already with companies coming to us that maybe have taken on a lot of equity and at high valuations, and sort of starting to get a little bit cautious about their opportunities to raise more capital at higher valuations in the next 6 to 18 months. And so I think it's about what you would typically do, which is long-term planning and potential conservation, and sort of looking into your options early. I think the worst case is obviously that you end up in a situation having to do things with a short runway and having not had sort of that planning done early. So I would look at my future costs and cash position and sort of start thinking about my alternatives and options as early as possible.
And fully agree there. I think one of these options then can be to already take action today, just in order to be conservative, meaning that you might reduce on your hiring targets, focus only on those talents that have direct top line impact, just to avoid getting into a squeeze. Because if you start taking action now, you have way more impact on your runway with actually less impact on your team than when you have to do so after summer. Then you need to take twice in measures in order to have the same end of year impact.
Thank you. And one last question here. We talked a lot about the talent war and how it's exacerbated by cultural elements in the Netherlands. Clearly, this is something that many markets experience, but it seems like it's something very common in this country. How should you walk in the line between being fast moving and dynamic while offering a competitive work-life balance, which we've seen that the best talent really makes this a very important point in joining their next venture.
Who wants to go?
Arthur, what have you seen? Arthur, what have you seen in your portfolio of your companies really navigating this talent war?
Yeah, I was silent because I was just thinking so many thoughts were going through my head. I definitely see companies now just spending more, like as one solution on how to approach it. So like they go much more for headhunting agencies compared to, I think, to a few years ago. Maybe that's also fair because round size increased. So I also do think there is more money to go after that, to see companies spend and basically focusing more on culture, and with culture meaning, of course, you have the VP of people, but also having really culture programs in place, but also actively, for instance, you have solutions like Peakon and more that really sort of like monitor like how do people feel about the company, their employee NPS score, those things are, I think, like actively monitored. As well as I think I don't know if there are founders in the audience, I do think if you genuinely care about people and you really show that in the end of the day you're the culture carrier of the company, that is one of these things which I think are very important, and people will sense it and also like to work with you. And the last point, of course, being I think to what Henrik also said, you need your employer branding, like really having your purpose. What is the impact you're going to make on the world is just vital to attract people, especially from our age and our generation.
Well, thank you so much, for sharing your knowledge and your experience here with the audience. I think it's pretty clear that the Netherlands is a fertile ground to test new things, right? Talent. It's a very commercial mindset. It's a very favorable business environment, and it's clearly a country where like so much can be achieved from if you're a startup. So other things that we mentioned that I thought was important to close with is like really to avoid the common pitfalls of internationalization. It's really access to capital, different tools that complement each other, like alternative venture capital. There's many out there today. Planning and clear KPIs and really a fixed approach to internationalization, and you can really get there and achieve what you want to achieve. So thank you, Henrik. Thank you, Jan. Thank you, Arthur. It's been great, speaking with you today and learning more about what you do. Thank you, the audience, for giving us some of your time and really sharing with you the experience of the panelists. If you have any questions, we're going to follow up with an email with a recording of this webinar as well as with clear takeaways. If you have any questions, please feel free to contact us.
Thanks so much, Maria.
Thank you very much.
Yeah, really great to collaborate on this.
Thanks a lot.
Thanks, everyone.
Bye-bye.